Let's head to business news now with Emma Hatton, who joins us from Wellington. Emma, more earnings to report come through over the week. So what do we have today and how's it looking?
Yeah, so believe it or not, Lisa, there were other business news stories today, aside from the NZX, which was, of course, a major one out there. But we did have some earnings results come through. So these came through in the pre-open market announcements. So obviously trading didn't start until 1 o'clock this afternoon, but we did get some announcements through earlier in the morning. One of those was the full year results for the Port of Tauranga. And this is the country's biggest port. It had a bit of a hit to its profit. It also, obviously, because of the COVID-19 pandemic, saw a drop in cargo volumes and shipping, so that impacted its profit. It made $90 million compared with just over the $100 million that it made a year ago. Its cargo volumes were down about 8% and the number of ships calling in were down about 10%. So not so bad really for the port, considering the impact that the pandemic did have. And its chief executive said what happened, what helped it weather that period was its diversity of cargo. So it wasn't confined to just a couple of key export markets. For instance, we heard right at the very start, big log jams with logs getting in and out of the country because China closed its factories. It does expect cargo volumes to recover, and it expects dairy and kiwi fruit to lead the way there. So that's what we heard from them. We also heard from Steel and Tube. Result there not so solid. They made a loss of $60 million. That was down from a profit they made last year of $10.4 million. All of that net loss was basically due to one-off costs, so some write-downs, put some money aside for bad debts and some costs for restructuring. It knew it wasn't going to be pretty. Its revenue was hit pretty hard by the lockdown restrictions, and that followed a pretty half first year that it had already had. The industry just wasn't in its favour. Vertical construction activity was down and there wasn't much of a demand for stainless steel. And then the lockdown happened, which is usually a pretty high earning part of the year for it. So had to make some cuts. It closed or consolidated 11 of its branches, and by Christmas that means 20% of its workforce will be reduced by 20%. That's close to 200 jobs. So about half of the staff have already left, and the rest will be gone by the end of the year. Overall, though, the company is pretty pleased with how it's come out the other side. They say trading in the first quarter of the 2021 financial year is strong. It's got a strong balance sheet. Its debt is low, but it is still playing it safe. Did not pay a dividend out to shareholders.
Hey, so what is this warning that's being issued about buy now, pay later products, and what kind of things are we talking about? What kind of products?
Yeah, so these are those lay-by type systems where you pay up front like a quarter of the price and then you pay the rest off over 3 or 4 weeks. And these are available in store or online. You'll see sort of stickers up on retail shops and as an option to pay if you're online shopping. They're quite, a lot of retailers have picked them up and you can get them for pretty much anything that you buy, either big ticket sort of whiteware items or just, a $20 clothing item from a fashion store. And it's a market that's relatively new to New Zealand. It's only been around for sort of 2-3 years. And, they are better than other lines of credit, like credit cards or hire purchase, because they don't charge interest. But you do get pinged for late payment fees or default fees or anything like that. So the Commission for Financial Capability is warning that they are starting to see people get themselves into strife through these providers. So one of the reasons is that a lot of people are running multiple providers. So there's a few companies that offer this. So there's like Afterpay, ParkPay, OxyPay, Laybuy. There might be a couple of others as well. And these guys don't, they don't talk to each other. You could rack up, even little bits among multiple providers, and you'd lose track of how much total debt you've actually got and when the payments are due and things like that. And then if they try and come out of your bank account, you might get pinged for a bank fee if you haven't got the money in there and so on. You can see how it might snowball there. They do run a credit check, but of course a credit check doesn't show what current debt you might have. It only shows how you've gone about paying your past debt. So one of the things that they're warning there is that people aren't thinking about that total debt cost and they're just looking at that upfront cost. So, it's only costing me $10, I'll get something else. I'll get something else. I'm only paying $30 up front. All of a sudden you've got, $140 bill or whatever it might be. And they did say they saw more people use these schemes during the first lockdown period. And they do expect when they crunch the numbers, they'll see that more people did start using them as well during this lockdown period in Auckland, because of course you can do online shopping in level 3. And these schemes are really popular. Afterpay in its financials, which have just come out this week. It doubled its revenue. It's worth more than $25 billion on the ASX. It's got close to 10 million customers, and it's still apparently in its growth phase. So these companies are not going anywhere, and they're not bad by any, sort of stretch. Consumers just need to be really smart about how they use them. So that's the warning.
And we did get some trading on the stock exchange today. So what numbers have you got for us?
Yeah, so it started trading at about 1 o'clock this afternoon, and it was smooth sailing right up until closing. Closed up 40 points, 12,093. Remember, our record high is 12,107, so we are really close there. We could hit that next week. The dollar is trading at 66.6 US cents, 91.4 Australian, and 50.2 British pence.
Thanks, Emma. That is Emma Hatton joining us from our Wellington studio with business.